The Moroccan private healthcare provider that helped a mother give birth to 9 babies this month is enacting a 1.5 billion dirhams, about $170 million expansion before seeking an initial public offering. Actital Holding, the North African nation's biggest operator of non-state hospitals, is considering an IPO in the coming years that would help finance plans to extend its business beyond Morocco. This according to Chief Executive Officer Roshdi Talib. The sector is also receiving a boost from King Mohammed VII's plans to extend social insurance to all 37 million people in a country that has one of the lowest ratios of hospital beds to population in the Middle East and North Africa. Joining us to discuss these stories further is Omotola Abimbola, investment strategist with Chapel Hill Denham. Omotola, thank you so much for joining us. I wanted to get your take on, I guess, what's happening over in Morocco with the healthcare provider wanting to expand and seeking a possible IPO.
Yeah, it's a very interesting development, and it perhaps shows that healthcare is actually a very big business that requires active private participation to make it work and to make the business case for it. And I think this also holds lessons for Nigeria. Currently, Nigeria spends quite a lot of money on healthcare tourism. Based on the latest CBN data, we spend roughly $2 to $2.5 billion, per annum on healthcare tourism. So from an economic point of view, it makes sense to actually have, more private sector participation, in the healthcare sector in Nigeria. That will, in one way, reduce healthcare tourism and should also help to improve Nigeria's standing on the SDG goals, of the United Nations. Healthcare is very, very important as the development and social outcome, and that's why it's one of the 16 items, listed under the UN, SDGs.
Thank you so much. And it's something that I guess is this a priority investment, I guess, for other, not just in Northern Africa, here, as you mentioned, Nigeria and other regions as well, under the context of COVID?
It is indeed, because, one thing the COVID pandemic actually taught us is that you need to be very self-sufficient in some very key sectors of your economy, particularly in agriculture and in healthcare as well. So we saw, many high net worth Nigerians who typically, travel abroad for healthcare tourism, but who couldn't travel due to the restrictions, which came by due to COVID. So I think this is becoming, a mainstream investment opportunity. We're likely to see that also, translating into active FDI in Nigeria going forward. Recently we've seen a number of, landmark investments in the healthcare sector in Nigeria. We had the Evercare Hospital in Lekki, which was launched not too long ago. We also had the Cancer Center, which was launched, in Lagos not too long ago as well. So I think we should expect to see more of this going forward in Nigeria as well.
Great stuff. Okay, well, I want to move to the SEC now, the Securities and Exchange Commission. And of course, we've got the commissioner of the SEC who was talking about the, I guess, likely or possible exploitation of people buying foreign stocks overseas. But Tola, I want to get your take on, I guess, the FX side of things. There's a lecture which he carried out at the Lagos Business School back in July of 2016. Within the context of this conversation, I want us to take a listen to that lecture and then come back to you in a sec.
Dollar exchanges now, for an average, there's one, now the parallel market even has an, should I call it, informal database called Aboki FX. I only find that out. Sorry, anyone familiar with that? You know that. On Aboki FX, it is 320, 321. On CBN website, 197. I almost almost got myself jailed, because I was doing a transaction for a client a couple of months ago. That's when it was still unclear, 186 or 1 something. So I did a very huge model, six sheets, and everything was based on CBN. Thankfully, I ran it by a superior when I was working in my former company, and that's when I knew that things were not really well.
So that, of course, was Dayo Obison, who is now the Commissioner for Operations at the SEC. What role does the foreign exchange rate play in this surge of about 400,000 people within the last 18 months in Nigeria going over to buy U.S. equities?
It plays a very, very major role. When you consider the fact that we have had a boom in local investors trading foreign securities in Nigeria, I would say it's a function of a number of reasons. Number one, we have had more digital platforms actually entering that investment space that have more or less created, or let me say, reduced the barrier to entry for the retail investors. Prior to now, we used to have high net worth individuals in Nigeria trading foreign equities through the brokers in Nigeria. But then the barrier to entry was very, very high because it wasn't digital, and then you need to be a high net worth individual to gain access. But now with the offshoots of digital platforms, offering that product to Nigeria, we have seen more people actually sign up to actually invest in foreign securities. And you also mentioned one very key factor that has played a role in this, which is just the exchange rate stability. So over the past decade, the Naira has weakened on average by about 7% every year because of the increased macroeconomic instability that we've been faced with in Nigeria. So when you're in an economy where your currency depreciates on the average by 7% every year, it's very natural for you to begin to think about hedging your assets by diversifying into foreign currency securities. But I think beyond the FS question as well, there's also a question of the return or the opportunities vis-a-vis what you have locally. If you look at the U.S. market, for instance, the S&P 500, which is the more or less the benchmark, the popular benchmark for measuring the performance of the U.S. equity market, it has returned 14% on an annual basis over the past decade, annualized in USD. Now compare that to the local equity market, the Nigerian, stock market. The NSE All Share Index has lost about 1% annualized in USD over the past decade. So if you compare the returns as well, it looks a lot more appealing in the US market compared to the Nigerian market. And I've mentioned another factor, which I think is very, very key from the perspective of the local investors, and that's the diversification. Most people's biggest investment assets today is a retirement savings account with the PFAs, right? And to be very frank with you, PFAs have done very well over the past decade, and the regulator PENCOM as well, they've done very well in trying to deepen the pool, of domestic savings in Nigeria. But one thing that most, RSA holders will complain about is that they are not able to fully diversify, their retirement savings account, being that, most of the assets are invested locally. So your RSA investment typically has a very strong home bias. So for some people, diversifying into foreign securities is just a way for them to complement what they have locally here as well. But having said all this, I also think that there's a very big role for regulation in trading foreign securities because you need to protect, the retail investors. So the regulator has to make sure, that the people or the digital platforms that are offering these products, that they have the right corporate governance, that they have the right people, they have the right, they have capital, they have, they have the right strategy, risk management strategy to protect local investors who are investing in these securities. So I think that's the perspective that the SEC is coming from. Prior to now, most of the digital platforms actually have partnerships with local brokers. So they are not directly regulated or licensed by the SEC. So I guess what is happening right now is that the SEC is not taking it a step further to say, no, you can no longer partner with a local broker. Now you have to directly come under the purview of the SEC to be fully regulated and licensed to carry out these activities in Nigeria going forward.
Thank you so much for that, Tola. I want to ask you about the gradual rising yields in the fixed income space, money market space. What do you make of it? Do you expect it to continue?
I think so. Like you mentioned, the party looks to be over in the local fixed income market, and it has been over since December of last year. Prior to then, we had a 1 year long rally in the local fixed income market. Where we had a 30-year bond at some point, even trading well below 7%, right, from a peak of over 14%. Before the CBN came up with the policy in 2019 to actually ban local domestic investors, domestic non-bank investors from the OMO market. That particular policy created a lot of liquidity in the money market that drove the 1 year long rally in the fixed income market. But since December, we began seeing, an uptick in yields in the local fixed income market, largely because the level of liquidity in the financial system has declined substantially. And now, because of the rising inflation we are seeing in Nigeria, central bank is also now considering actually tightening monetary policy going forward. And I think, that particular trend will possibly continue over the near term. One major catalyst that we should look at for this month is the MPC meeting that is taking place, I think, in the third week of the month, when the MPC committee members, will be deliberating on the performance of the economy and financial markets since the last meeting, and also be setting interest rate expectation for the future. So clearly, from the last meeting that they had, they already indicated that they are now thinking in a much more hawkish point of view, considering that inflation rate is rising aggressively in Nigeria. We have a lot of macroeconomic imbalances, which require a much more tighter monetary policy framework. So possibly, our own expectation is that the CBN would possibly, have to raise interest rates at this upcoming meeting by about 50 basis points to 12%. If it doesn't happen in May, it will most likely happen in July. So I think if you look at the direction of monetary policy, it suggests that, the uptick that we are seeing in yields in the fixed income market will persist. And also from a liquidity point of view, we also have very scanty liquidity, coming in for the month of May. We have very patchy bond coupon payments coming in, and all maturities are also very, very small, at less than 300 billion naira. So, basically looking at the policy points of view and liquidity points of view, it appears as if we are going to continue to see further uptick in yields in the Nigerian fixed income market.
All right, great stuff. Tola, we got just a minute to go. You've mentioned the regulator and what they could do at the next MPC meeting. As an investment analyst, what would you be advising clients to do with respect to the yields and I guess how they move around their portfolios?
So I think the best thing for any investor to do at the moment is actually to keep what we call a short duration position. That is, don't buy long-term bonds, buy money market securities. Right now, we now have the 1-year NCB trading, the primary market auction stop rate set at 9.755% at the last NCB auction. This week on Wednesday, another NCB auction is scheduled, and possibly we are going to see the 1-year clearing above 10%. So we think that, keeping a short duration exposure, that is buying short-term securities, will protect your portfolio from losses that you could sustain if you were buying bonds that have a very long duration. So I think that's the appropriate strategy for now. Also, the equity market might not be the best place to invest in at the moment, at least until we gain a greater clarity on the direction of interest rates. Being that typically there is a negative correlation between the equity market's returns as well as the movement in fixed income yields. So anytime we see yields rising in the fixed income market, typically we see sentiment being soft in the equity market.
Great stuff. Thank you so much. Omotola Abimbola, investment analyst with Chapel Hill Denham. Thank you so much, sir.